IGCSE CIE solved paper code 7110 November 2009. Books of original entry topic or special journals or day books. These type of ledgers are given in which we have to give our calculations. Let's look at the question. The following balances were taken from the books of Salim Electrical Suppliers on 15 September 2009. Sales balance credit, inventory balance debit, Eastern Retailers trade receivable balance debit, Khan Limited trade receivable balance debit. The following transactions took place. We sold goods at a list price of 500 less 20% discount on trade credit to Khan Limited. We received a check from Eastern Retailers in full settlement of their account less 5% discount. On 24th September, Khan Limited returned us goods of $50. We should keep in mind we had sold them the goods on 20% discount. 25th September, sold goods on credit to Eastern Retailers. Khan Limited ceased trading. Salim Electrical Supplies decided to write off the balance of Khan Limited as a bad debt. Requirement is name the type of discount that was deducted on 16th September 2009. Because we are offering them the discount being a regular customer, this is called trade or quantity discount. Name the document issued to Khan Limited on 24th September. For the return of goods, we always issue the credit note. So this is the document issued by Khan Limited. Name the document issued to Eastern Retailers on 25th September. On 25th September, we are selling goods to them, therefore an invoice is issued, and the invoice issued at the time of sale is called sales invoice. The two ledger accounts are required. We have to prepare them. Let's start. Trade receivable ledger account of Khan. Khan's account we have to prepare. This is the debit side, this is the credit side. First of all, we will be entering the debit balance of Khan, that is 2150 in the debit column. This is the opening balance which will be known as balance brought down. After this, we'll see this balance brought down is actually on September 1. September's 1 balance is given to us. We'll enter the balance here. Then we had seen the transactions related to Khan. We had sold them goods at 500 list price less 20% discount. Selling goods to them means debit in their account. Due to sales, the account of Khan is debit. The amount should be 500 less 20%. 20% of 500 is 100. That means 100 is the discount. So the goods of 500 after deducting the discount of 100 will be of 400. So their account is debited by 400 only. Let's have a look on more transactions of Khan. Only focus on the transactions of Khan. Khan Limited returned goods for $50 list price. We should remember that they were sold on 20% discount. So when they are returning us the goods, we will be recording them at the price for which we sold them. $50 goods are returned which were sold on 20% discount. It means we had not taken the $10 discount. So actually the $50 list price goods were sold to them for $40. Therefore their account should be credited by $40 only due to this return of goods. Furthermore, they are telling us in question, we stop trading with Khan and whatever is the balance to be recovered from them is written off or treated as a bad debt. Bad debt is something which the company or the business assumes as will never be recovered. It's a loss to the business. We'll be crediting the account of Khan just to close them. We'll transfer the balancing figure to the bad debt account. So adding these amounts, subtracting this amount will give us the balance or the amount for bad debt. This is the bad debt amount which we have to record, and this is how their ledger will be ruled off. Khan's ledger is done by us. Let's look at the ledger of Eastern Retailers. Again, we look at the question for Eastern Retailers balance. Let's see if there any opening balance. Is there any balance given to us as the opening balance for Khan for Eastern retailers. For Eastern retailers, again the debit balance is 1200. First of all, we'll enter this in the debit side. Then we'll see we had received a check in full settlement less 5%. For this amount, we'll be recording this transaction. Then we had sold goods to Eastern retailers, and that's it. 2 transactions related to Eastern retailers and the opening balance. Only focus on these 3 things while preparing the account of Eastern retailers. Opening balance will come first of all. Then we had seen that on September 18 we are receiving a check from them after deducting a discount of 5%. 5% discount is 60. This was the amount to be recovered from them. 60 is the discount given to them. Their account will be credited with the discount amount, and this is the amount which we had received as check from them. After deducting discount, this is what we had received from them. This is done. Let's have a look on the third transaction. What was the third transaction? Sold goods on credit to Eastern retailers, $250. Because we had sold goods to Eastern retailers on credit, so their trade receivable account is debited. We will be entering this information here. Okay, this is the round off thing. Let's see the balance carried down. Only this is the balance carried down, rule of their account, and the balance carried down will become the brought down balance for Eastern retailers on the 1st of October. That's all about Eastern retailers ledger account. Like, subscribe, share. Commerce Lecture Online.